Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler, coming to you from our iconic studio above the trading floor here at the New York Stock Exchange. And for our viewers tuning in, a reminder that we officially kick off our live show, our weekday morning program, every day 9 to 10 a.m. Eastern. You can watch us on tv.nysc.com, download the NYSE app, and of course, view us on Cheddar as well. Well, as we embark on the fourth quarter, there is no shortage of volatility or storylines to cover in today's show. Yesterday, Iran launched missiles at Israel, sending oil prices spiking and stocks tumbling. The Dow at its worst was down 385 points, and Israel has since started a ground operation into Lebanon. Well, this comes after the major indexes finished the third quarter at record highs. The federal government's decision, the Federal Reserve that is, to cut interest rates did lay the framework for a better than usual September. Now, as investor sentiment rose, the year's third largest IPO is set to take place here at the stock exchange today. In fact, it's the first billion-dollar IPO to price its deal above the range since that IPO boom of 2021, according to Renaissance Capital. StandardAero is going to debut after raising $1.4 billion in the deal. And the company is an aircraft engine maintenance provider with a market value of $8 billion. Well, as we begin a busy day on Wall Street, let's take a look at what's on tap for our show. Stock futures are pointing to a mixed open today after what was a volatile session. I'll be joined by resident experts to discuss where we go from here in the markets, what it means for you and your money. We'll also bring you exclusive remarks, as we always do, from StandardAero's chair and CEO, Russell Ford, as he presents in the boardroom before the opening bell. That, of course, preceding an IPO and a celebration ceremony on the bell. Russell Ford's going to join me for an interview after the stock market opens. Well, as we await those boardroom remarks, I do want to bring in Jay Woods. He's a chief global strategist at Freedom Capital Markets. Jay, it's great to have you on the show this morning.
Hey, great to be here.
So much to talk about, as always,
Yep.
especially with the latest volatility. September, usually a volatile month, but was actually pretty solid, coming off, of course, the end of the third quarter as well. With what we see unfolding in the Middle East, what can you tell me?
Yeah, well, first of all, September, first up September since 2019. We made an all-time high in September. We've only done that 21 other times. 19 of those 21 times, guess what? We've traded higher, closed higher for an average of a 5% gain. So that's a positive statistic I like to look as we head into the final quarter of the year, which is historically the strongest quarter of the year, up an average of 3.7%. You mentioned yesterday. Yesterday was a kind of a historic day down here. I was just on the morning call I do with my team, and we were talking about it. It's very rare the market is open and you see what we saw in the Middle East, literally bombs flying through the air. A lot of jitters. The Dow down 385 points at its worst. It got people a little nervous, but let's put it in perspective, and you hit on this in the opening. We were at all-time highs the day before. The Dow was down less than 0.5%, S&P down less than 1%. So we're going to be watching that closely, but given what happened, thankfully it didn't escalate yet into anything bigger. We're keeping an eye on that, but for the most part, we averted what could have been a little more of a panic in the markets yesterday, in my opinion.
So let's talk about volatility. October is a spooky month when it comes to seasons, but also can be more volatile here, of course, in markets. Do you anticipate that some of this volatility could continue?
Well, it's definitely spooky. I'm already dressed for the occasion, wearing my ghost tie here. But no, we expect October to be volatile, and people get jittery in October. It's known historically for some of the worst crashes in history. Now, September is the worst month on record. October is known for the most lows of any other month in the year. So I like to be positive about things, and given that the S&P 500 is up 20%, we may not go up too much in October. We're getting into earnings season. We got a few today that we may want to talk about, but no, I think we're going to see some volatility, and these headlines kicking it off are a reason why.
You know, over time, the past few years, we've seen this unofficial start to the holiday shopping season begin October 1st with deals starting to roll out. We have this port strike obviously on our hands. What could the ramifications be of these port strikes?
Yeah, the port strike is on everyone's mind. Right now, we kind of anticipated it would go a few days. The longer it goes, the worse it could be for the overall economy. The impact to you, the investor at home, right out of the gate, groceries, perishable items. It'll affect us exporting more than importing right out of the gates, but that's where you'll see the impact at first. And then if it goes longer, then it could affect the GDP. Then we have to be concerned about those holiday shopping seasons. Companies like Costco and Walmart, they've prepared for this. So, you know, when they give their guidance that they're okay with a small supply chain shock, that gives people a little, you know, more of a leeway to be relaxed. But if this goes past the weekend, then I'd be concerned, especially in a political cycle, because this will be a political issue as we head into the election.
It's interesting. Nike reporting earnings after the close yesterday pulled its guidance amid this CEO change, and the stock was down several percentage points in the wake of that. Could that portend anything for the broader market, what we might see as earnings season ramps up in a few weeks?
Yeah, I think Nike is isolated to its own little island. They are going through some of their own turmoil. They have a CEO change, as you mentioned. John Donahoe will be stepping down at the end of this quarter. Elliott Hill taking over. He's a lifelong Nike employee. And what we were watching for in that Nike earnings report was guidance, and they pulled their guidance. And why they pulled their guidance is they want a clean slate for the new CEO to take over. He'll put his brand on it, but the stock is down 5% in the pre-market. What we're watching for in price action with Nike, will it make a new low? I don't think it will. It will be down, but it's going to take some time to turn it around. And this was one of those quarters where they're like, we're not going to give you anything. We're going to wait till we get the stamp of the new CEO involved.
As we start fourth quarter trade, what should investors be prepared for in terms of seasonality trends?
Oh, seasonality, my favorite. Expect a lot of volatility as we go into the election. There are going to be crazy headlines. We're seeing real crazy headlines in the Middle East right now. Try to block it out. Focus on the overall trend of the market. Focus on earnings growth. That will kick off officially next Friday with JP Morgan and the banks. You know, in the last two elections, this is a fun stat I like to throw out all the time. 2016, controversial election. The low for that quarter, election day. The low 2020 for that quarter, election day. So expect a lot of volatility, and hopefully once we get a decision, regardless of outcome, the market should trend higher. There are a lot of people that are missing out on some of this rally. Technology, this is my fun fact, was even for the third quarter, yet the S&P 500 was up 5.5%. The three biggest stocks in the technology index are also the three biggest stocks in the S&P 500. They were down. If we get a tailwind of some of these tech names, we could see a nice explosive rally into year end.
We are standing by for those boardroom remarks, Jay, for our viewers following along as well. We might need to cut into those at some point, but while we have you here, I want to keep going. We saw the vice presidential debate last night. Of course, the stock exchange hosted House Speaker Mike Johnson for remarks in the boardroom late yesterday after the market closed. Is there anything that you're hearing about policy coming from candidates, presidential candidates, that might shape the markets in the future?
Well, it was good to hear the candidates talk about policy. That was one of the things, and that's what the talk of this debate was. Not necessarily the exact policy stances they're on. They're going to, they're going to be on other sides. That's what we do. But there was civility brought to it. And hearing Mike Johnson here at the exchange just get to talk about the economy and how the market has been and what are some of the things, the hurdles that we have to look forward to or avoid in this case was refreshing. So the debate didn't really bring us any new clarity on anything, but it was a different debate than what we've been used to, and then a lot of people seem upbeat about that.
I mentioned we're awaiting those boardroom remarks from the chair and CEO of StandardAero, third biggest IPO this year. Raised more than $1 billion, market cap of $8 billion, and the stat that I like is that it's the first $1 billion IPO to price above the range since the 2021 IPO boom. You and I remember that down here on the floor of the stock exchange. There was a lot of action back then, of course, that was then later curtailed by inflation and higher interest rates. What's on your mind when it comes to this deal?
Well, first of all, great stat. I did not know that, so I'm going to probably use that later on today. It's exciting because a lot of people have been waiting to go public, and when you see a great company like this test the public markets, and get valued the way they are and have the buzz down here on the floor, it is pretty good to get this thing going. It'll take a while before we open, I'd say after 10:30, but this is what we've been waiting for, not just as an exchange.
Jay, I'm going to jump in. We are going to take those boardroom remarks currently underway.
Congratulations. Okay. All right. Good morning, everyone. I appreciate everyone being here. It is my personal honor and pleasure to be here with you at the New York Stock Exchange. And thank you for joining us on the century-long journey of StandardAero. On behalf of the thousands of StandardAero team members worldwide, we are incredibly proud to become a New York Stock Exchange listed company and to join the ranks of other highly successful companies who've partnered with this legendary institution. I want to especially thank the StandardAero executive team and their spouses, our board of directors, and the Carlyle Group for joining us here today to recognize this milestone. This path has been extraordinarily challenging, mentally and physically demanding, and full of impossible obstacles to overcome. But that's what it feels like when you are doing something historically significant. This watermark event speaks to the strength of our team, our commitment to the aerospace industry, the relentless focus on perfect execution, and the dedication of our leadership team. As a public company, we'll have access to a broader world of business partners that will ensure we continue to grow our position as the most trusted partner in the aerospace industry to repair and maintain aircraft engines that power the world's increasing demand to fly. The aerospace aftermarket is expected to total more than $1 trillion this year, and the market need for engine repair and maintenance is only growing across commercial, military, and business aviation. We provide a critical element of the aerospace infrastructure by performing highly technical and highly regulated maintenance and overhaul for the most critical system on an aircraft, the engine. We're authorized on over 40 engine platforms by all major regulatory agencies and engine manufacturers, and we are proud to be aircraft engine experts. Today is an important day because it opens the door for the next stage of growth for StandardAero. The world's demand for air travel has always increased since December of 1903, when the Wright brothers made the first powered flight. And every time I see an aircraft take off and know that we had a part in making that airplane fly, there is no greater job satisfaction. I truly believe, and the market has validated, that the sky is the limit for StandardAero. I know it in my heart. In close, I want to thank everyone for everything you've done to get us to this historic place at this exact moment in our history, and for being here to celebrate this important milestone of becoming a publicly traded company listed on the New York Stock Exchange. Thank you to our partners at the New York Stock Exchange, our board, and my colleagues, and also to our private equity sponsor, the Carlyle Group, for being supportive of StandardAero and investing significant resources to facilitate our growth. I can't wait to see what's next for us. Most importantly, with the IPO behind us, I can't wait to get back to putting my full focus on running the company and seeing it continue to grow. Thanks, everyone.
All right, don't go anywhere. Don't go anywhere. We got a couple things to do.
All right, our thanks to Russell Ford, of course, the chair and CEO of StandardAero. Huge day for his company after the private equity firm Carlyle Group had purchased StandardAero back in 2019. Some of its biggest clients are actually NYSE-listed companies. Delta Airlines, that's ticker symbol DAL, GE Aerospace with the ticker symbol GE, and UPS, that ticker, of course, UPS. We heard the pathway forward. I'm going to be joined by the CEO later in the show after he celebrates the opening bell before that first trade officially on the floor of the New York Stock Exchange for its IPO. We've got a lot to cover in terms of how he wants to use this $1.4 billion raised in this deal to expand the company and its reach. Of course, an engine maintenance and repair company that services not just commercial aircraft, but business and government aircraft as well. And so we'll dive into some of those details. For our viewers tuning in wondering, what is an IPO? Well, there are many ways a company can choose to list on the stock exchange, ranging from, of course, a traditional IPO like we see today, to alternative methods like a direct listing or even a SPAC merger. Well, StandardAero is taking the traditional route, and that involves working with an investment bank to underwrite the deal and issue shares to the public so the average investor can own a piece of this company. Well, due to all the elements involved in going public, traditional IPOs typically take anywhere from 6 to 12 months, and they do require plenty of paperwork with the SEC. Here's some other things to know about traditional IPOs and, of course, the New York Stock Exchange. Well, this path to going public involves what's called an IPO roadshow, where the company's leaders travel to meet with potential investors and market the company. Now, the night before the exchange listing, the price of the stock is set based on investor interest, and money is given to the company, and in exchange, investors receive shares, some portion of which will be sold on the stock market the next day. Companies listing via traditional IPO don't start trading right at the market open at 9:30 a.m. Rather, a price discovery process takes place in which a designated market maker, or DMM for short, takes the lead in finding the right price at which the stock should open and start trading. Now, once buyers and sellers agree on a price that is acceptable, the stock will officially open for trade. Typically, we see that around, let's say, 11:30 a.m. Eastern, though, of course, it can vary based on the size of the deal and the appetite. Well, the NYSE hosts over 3,000 events each year, and some of them do include IPOs. Yesterday also included remarks from the House Speaker, Kevin Johnson. Stay with us, because after this short break, we'll hear what the speaker had to say at the stock exchange.
Joining me today on NYSE Floor Talk is Lane Best. He is the CEO at Deep Instinct. Lane, it's fantastic to have you here. Thanks for joining me.
It's a deep pleasure to be here, Judy. Thank you.
Thank you. So now, Lane, you were the former CEO of Palo Alto Networks and COO of Zscaler.
Yes.
You retired, then you came out of retirement, and you are now leading Deep Instinct.
That's right.
So tell me, what excites you about Deep Instinct, and how is it different from other cybersecurity companies out there?
Well, I'd say that I still have some unfinished business. Throughout my career, over 20 years in cybersecurity, I focused on innovative and disruptive technology to essentially protect companies and governments from the cyber attackers. The challenge has gotten harder and harder. And quite frankly, with all of the technology the companies have purchased and all the customers that I've amassed over those years, I could never say to them, you can actually prevent from getting a cyber attack. And so this to me was the technology company using the most sophisticated AI to do what's most important, protect companies' data.
Now, security leaders are turning to AI to fight back against bad AI, but as you like to point out, not all AI is created equal. Tell me more about that.
AI is a term that's used very broadly and unfortunately very loosely. So when you place a bet on putting AI in your cyber detection and prevention, it really depends on the models. Most of the models today are older models and they require a lot of training. But the problem we have now is these models are not based on.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler, coming to you from our studio above the stock exchange. Well, yesterday afternoon, House Speaker Mike Johnson was here to deliver his latest economic address just about 5 weeks before the presidential election. And in his speech, Speaker Johnson dove into items like how he thinks a Republican-led federal government would best protect U.S. business interests, of course, hailing from the Republican Party himself. Well, joining me now for a closer look into what he said is my colleague Trinity Chavez, who was with me at Speaker Johnson's address. Trinity, I'll send things over to you.
That's right, Kristen. So Speaker Johnson started his speech by expressing his gratitude for the opportunity to be at the NYSE and to speak and highlight the importance of being at the world's greatest financial center with business leaders, but then immediately condemned recent attacks by Iran on Israel, calling for stronger U.S. leadership. He also criticized the Biden administration for appeasing Iran while expressing support for Israel and called for a, quote, maximum pressure campaign on Iran and stronger sanctions enforcement.
We all just witnessed another brazen attack by Iran against Israel and an apparent coordinated terrorist attack in Jaffa. We're praying for the safety of the Israeli families, of course, and the House GOP leadership is urging the Biden-Harris administration to deliver a strong message to the Iranian regime that is, this unjustified violence and terror has to end. We also recognize that it's hypocritical for the administration to express support for Israel's defense while continuing to appease the Iranian regime with billions or hundreds of billions of dollars actually in sanctions relief. It's long past time for the administration to fully enforce the Iran sanctions on the books and reimpose the UN sanctions lest they expire. Right now, American leadership has never been more important, and we need a maximum pressure campaign on Iran and its terror proxies. The world must know that the United States will continue to stand firmly with Israel as it fights for its very survival.
Now, Speaker Johnson addressed the challenges of American families and what they face with inflation, taxes, rising costs, and falling wages, promising to introduce an economic plan modeled after Trump-era policies. He also criticized current policies raised concerns about China's trade practices and a potential Taiwan invasion, and linked illegal immigration to unemployment, proposing tax measures to address it.
First, we'll promote investment and opportunity. And we'll do it by extending and building upon the Trump's tax cuts. Number two, we'll use our economic weight to prioritize this nation. Gone are the days of allowing China to steal our jobs and technology and exploit our trade deals and hollow out our manufacturing sector. There's much more we could say about the threat of China, of course, but House Republicans also plan to prioritize our nation by using the tax code to secure our border and fight the drug cartels. After 4 years of open borders and a record number of illegal crossings, we now have an absolute catastrophe across the country, including right here in New York, as you all know. And this catastrophe has resulted in enormous human suffering and financial cost. You may have seen how Jay Powell even said that the mass migration issue is causing unemployment to rise, and that seems quite obvious. That's why it's our intention to also use the tax code to deter illegal immigration and eliminate existing policies and loopholes that currently reward illegal aliens.
House Speaker Johnson warned that rising federal debt is a key national security and economic threat, especially to small businesses. He pledged to reduce government spending, cut wasteful programs like the Inflation Reduction Act, address $1 trillion in improper payments, and shrink the federal workforce to create a more efficient and responsible government.
And it's no surprise that many secretaries of defense and national security advisors have called the growing federal debt the greatest national security threat that we face as a nation. Nor is it a surprise that our small businesses are telling us that the ever-increasing debt is the greatest long-term threat to their own growth. Under President Trump and a united Republican Congress, we will grow the economic base and stop mortgaging our children's future to fund today's big government bureaucracies. We will cut the wasteful Green New Deal spending and Democrats' so-called Inflation Reduction Act that is costing twice as much as it was advertised and is sending our taxpayer dollars to China. Meanwhile, we're going to root out waste, fraud, and abuse and improper $1 trillion payments within the federal government, which have grown to the highest levels ever in the last 4 years. And we're going to reduce the size of the federal workforce and root out a long list of non-essential jobs throughout the federal bureaucracy. Our government is going to be a responsible government with a reduced scope and reduced spending, a government that's responsible enough to know that it can't and should not do everything.
And Kristen, he ended his address by saying that his party is ready to lead again, that it won't be easy, but America always overcomes. So there's a lot to look out for come this November election. Kristen?
Absolutely right, Trinity. Trinity Chavez joining me on our balcony overlooking the trading floor. We'll check in with Trinity a little bit later. But as we host world leaders and, of course, U.S. politicians, I do want to highlight that last week, the 79th session of the UN General Assembly commenced right here in New York City, and the stock exchange played a key role in the festivities. Well, several world leaders, including the presidents of Argentina and South Africa, the president of the European Commission, and the U.S. Secretary of Energy were on hand to ring the opening and closing bells throughout the week. Let's take a look back at what unfolded inside the walls of this iconic institution. All right, well, StandardAero is going to ring the opening bell here at the stock exchange on the other side. Stay with us.
Joining me today on NYSE Floor Talk is Mike Vitek. He is the CEO at ShiftKey. Mike, it's fantastic to have you here. Thanks for joining me today.
Yeah, thanks for having me. I really appreciate it.
So let's start off by talking about the company. Tell me about ShiftKey and your mission within healthcare.
Yeah, ShiftKey is a technology company that what we've done, we've built a two-sided marketplace for our healthcare professionals to be able to find connections within the space for the healthcare facilities that are in need of additional help to help their patients that are in the buildings which they serve. We've done that by an environment that provides empowered work. And by empowered work, what I mean is our healthcare professionals that they have been mainly marginalized. We've got a healthcare workforce crisis in this country right now, to where we have more and more nurses that are actually leaving the profession or pushed to the sidelines. And what we'd like to do, and what we do through our technology, is we allow them an access to work how they want, when they want, even for the pay they want, to match with facilities that are in need, to help take care of their patients, and provide a better, just start to finish environment for patients that are coming out of an acute space all the way through back to home. And we are a critical relief valve for what the healthcare industry needs.
ShiftKey was founded in 2016, and since then you've become a tech unicorn with a $2 billion valuation. Congratulations.
Thank you so much.
So now talk to me about your growth.
I'd like to say it was easy. I'd like to say it was quick as it seems. We were founded in 2016, and one of the very unique things about ShiftKey is that we've been profitable and remain profitable since the very beginning. We were founded out of an actual clear and present need within the market. And it's allowed us to expand rapidly by just creating this connection or connective tissue between our nurses in the space, national healthcare facilities.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here on the floor of the stock exchange. We are awaiting the opening bell. StandardAero, the third biggest IPO, set to celebrate its offering on the podium. And of course, we'll be joined by the executive suite, including the CEO, after the market opens. I want to bring in my colleague, Trinity Chavez. Trinity, a lot of action here today. You and I will both be speaking to the executives. What are you watching heading into the open?
Yeah, you know, there's a lot of things happening right here, especially as we get ready to open up the U.S. equity markets. A lot of energy happening surrounding this IPO. It is the second largest IPO for the exchange, the third largest of the year. Prices for this IPO were priced out above range, pricing it at $24 a share. The company and the investors sell 60 million shares to raise over $1 billion, $1.44 billion to be exact. But you know what? I think it's time to tune into that opening bell. Kristen, I'll catch you on the other side.
All right, we are off to the races in today's trade. Mixed open here for stocks, but still right near record highs. And joining me now to break down what it means for you is Jonathan Corpina. He's a senior managing partner for Meridian Equity Partners, of course, a firm based here at the stock exchange. Jonathan, thanks for joining.
Kristen, good morning.
What do you make of today's market action?
I think we're just getting a follow through of what we saw yesterday. Let's kind of just back it up a little bit. We had a very strong third quarter. We've actually had a strong year all along. Returns have been close to 20% as we ended the quarter. So naturally, we're going to get a little bit of a sell-off as we enter the new quarter. You couple that with the headlines, the geopolitical headlines that we got over the weekend and what's been happening overnight, we're going to see a little pressure on our markets. But I need to see a few days of this to see how it pans out, to see if it's really going to be significant pressure or if it kind of washes itself out in the cycle.
We had seen the Dow drop 385 points yesterday at its low, recovered some in terms of what we saw happening in the Middle East with Iran launching those missile strikes on Israel. What did it mean that we didn't see a steeper drop there in stocks?
Yeah, and that's exactly what we're looking for, right? When you get a headline like that, a significant headline like that, the market's going to initially react. We see that. But then it's how does it react after we start digesting the news as it starts playing out? What we see that when we get major headlines, when we get earnings reports, when we get unknown headlines, the market gets very volatile and then finds its spot. So it was good to see yesterday that, yes, even though there was pressure on the markets, we did close off the lows. It seemed like the market was trying to make its way back up again. And you put all of that aside, we've got a lot of economic data coming up this week. We've got our normal earnings season that's going to start kicking off in a few weeks. So there's other things on our calendar that we're looking forward to that probably are going to help buoy this market.
Now, I'm curious in terms of where we go from here. I know that it's the fourth quarter. October, usually a bit of a volatile month, but coming off of a strong third quarter, what are your expectations?
Yeah, I know we love to draw comparisons to past history, but I think we're in such a unique environment right now, both from an economy point of view, from a political point of view. There's a lot of uncertainty that's ahead of us. We'll continue to talk about interest rates and what the Fed's going to do with that. But I think the month of October, we are going to get a little choppy just because we have this election coming up. It's neck and neck. We don't know how it's going to play out. And it's going to take us some time to really digest how that all goes from there. So yes, I do think once we get through November and the dust settles a little bit about who is going to be our next president, we'll get that normal rally as we normally do towards the end of the year. But I think also we have to keep in mind, again, we're starting the fourth quarter with the market up close to 20%. If we get a little bit of a pullback, 3, 4, 5%, it's still okay if we close the year up 13, 14%. So let's kind of keep it all in perspective of where we were and how we're going to finish up.
John, we have just about 20 seconds left or so, but in terms of what we heard from the Fed Chair Powell recently, no preset course for rate cuts. Does that change your expectation at all?
No, they're going to remain data dependent. They've said that. We continue to watch the data along with the Fed, and they're going to have to make decisions along the road. I think taking that first step that they did in September was the big step, kind of ripping the Band-Aid off, waiting to see how that plays out. But we're going to see at least one more rate cut this year.
Jonathan Corpino with Meridian Equity Partners. Jonathan, thank you.
Thank you, Kristen.
All right, well, StandardAero plays a big role in helping people travel all over the world. It's the company IPOing today. And after this break, we'll find out what's in store for travelers ahead of the holiday season. Stay with us.
Deal is a cloud-based payroll and compliance software that is simplifying the way international companies of all sizes hire. We're going to find out exactly how on this episode of Taking Stock.
We support any type of employment anywhere in the world with a focus on global team.
And what sets you apart from your competitors?
Well, we own fully our infrastructure. It means that we have direct presence in more than 120 countries today, hundreds of legal, tax, compliance experts, a full stack, a full software stack dedicated to HR and payroll, from having local payroll engine for like more than 50 countries, advanced HCM functionalities like LMS, talent management, but also a treasury management system that allow us to pay tax, employment tax, and employees around the world in more than 160 currencies.
You say that Deal is a forever people platform. What do you mean by that?
At Deal, we are helping customers to focus on their business, developing their business globally, developing their team globally, and we take care of compliance and technicalities.
And what was your motivation for starting Deal?
My co-founders, Shure and Alex, did the best school, in the US. And they met a lot of people there. These people didn't have the chance, to get a job in US because of from where they were, and they had to go back. We think this was not really fair, but we also soon understand that the problem was more about lack of knowledge of global compliance, employment, international employment, rules, laws. And we thought about it and we decided to fix it.
What sector? Now, with the holiday travel season right around the corner, keeping on planes in tip-top shape is actually more crucial than ever before to ensure a smooth trip. From maximizing your frequent flyer miles to understanding how maintenance impacts your journey, Nick Ewan, he's the Senior Editorial Director at The Points Guy, is joining me now to break it all down. Thanks for joining us, Nick.
Yeah, thanks for having me.
So from your perspective, how does the quality of aircraft maintenance impact a traveler's ability to take full advantage of frequent flyer programs and premium travel benefits? And how does this impact customer loyalty to specific airlines?
Well, first and foremost, maintenance is all about safety, making sure that planes are operationally reliable. But that really translates down to the customer's experience, because if you have an unscheduled maintenance delay or cancellation, something that pops up that could have been avoided by that regularly scheduled maintenance, that can really lead to a negative perception. And it doesn't matter how frequent of a flyer you are, all it takes is one really bad cancellation experience, and all of a sudden you're going to be shopping around and looking at another airline. And when it comes to loyalty, obviously a lot of travelers are looking to put their points and miles to use this holiday season. If you redeem your points or your miles on a flight that then gets canceled because of maintenance, those miles essentially are just going to sit there. And again, that creates a really negative customer perception and may cause them to look at another airline and do business with another company.
And in what ways do frequent flyer programs and travel perks such as points and miles benefit travelers when it comes to dealing with unforeseen maintenance issues or travel disruptions?
Well, first and foremost, if you have elite status with an airline, oftentimes you will be able to get maybe some added benefits, some additional perks, and be able to navigate some of those cancellations in a better way. But really, that top tier of status is really a relatively narrow margin of the number of travelers that are filling a plane. And airlines really need to have the majority of those seats filled by paying passengers, regardless of whether they have status or whether they even belong to their loyalty program. And ultimately, those if there are really significant maintenance issues that cause widespread concerns, that can really impact a customer's willingness to travel with that airline again. So those premium perks are we love all of those things, but sometimes it's those behind the scenes things like maintenance that oftentimes allow a traveler to utilize a lot of those benefits.
Now, with the holiday season travel, right around the corner, are there specific credit cards that you recommend consumers use to really build up their loyalty status and miles so it would help them with their flights, visiting their family or friends during the holiday season?
Well, it all depends on what you're looking to do with your rewards. If you're loyal to a particular airline, you want perks with that particular carrier. Oftentimes, a co-branded credit card like a Delta American Express card or an American Airlines MasterCard or a United Airlines Visa, those can give you perks like free checked bags and lounge access on some of the premium cards. But if you are more of a free agent and you're not loyal to one airline, those general travel rewards cards like a Chase Sapphire Preferred, an American Express Gold card, or a Capital One Venture card can really get you some nice perks. I'm a sucker for lounge access myself. I love having that place to relax before a flight. So I typically lean towards those premium perks. But really, it's a matter of asking what you really value and what you want the most out of your holiday travel this year.
Now, we have about 60 seconds left here. Talk to me about what you think consumers should consider when it comes to making these purchases on their credit cards. What strategy do you implement when it comes to these sort of, big planned travel experiences, and how can they maximize those rewards?
Well, there are various different credit cards that offer bonus points on a variety of purchases, not just travel, but your groceries, your pharmacy purchases, dining out at restaurants. So really looking at where you're spending your money and identifying where you're going to be earning the most bang for your buck. When it comes to travel purchases, one of the things that's often overlooked is looking at what protection benefits are built into your card. A lot of popular travel credit cards have trip cancellation and interruption insurance, even trip delay insurance, where if you get stranded this holiday season, have an unexpected overnight at a hotel trying to get to your destination, there are a lot of credit cards that if you used that card for the trip, they'll actually reimburse you for those expenses. So the points and miles, lounge access, all those perks are great, but sometimes it's those soft benefits, those protections. So you really want to take the time to choose the right card to make those purchases this holiday season and into 2025.
Great. A lot of key takeaways right there. Thank you so much, Nick, for joining us.
Yep, thanks for having me.
Now, StandardAero will officially begin trading here at the NYSE later on today, and we're going to speak with the company's executives, including its CEO, about the significance of this moment up next.
Joining me today on NYSE Floor Talk is Jamala Arlen. She is President and CEO, U.S. Life Insurance at Genworth. Jamala, it's fantastic to have you here. Thanks for joining me.
It's great to be here with you, Judy.
Thank you. So now, Jamala, tell me, what is Genworth Cost of Care Survey?
One of the first steps in making a plan for your aging journey is understanding your care options and understanding the cost. So since 2004, Genworth has been conducting our flagship Cost of Care Survey, and to do exactly that, help families navigate and figure out how to make a plan for the aging journey. There are not a lot of resources available for consumers to make that plan. And ultimately, what's special about the Genworth Cost of Care Survey is that it helps connect the conversation from cost to quality. And then within the spectrum of quality, taking the conversation from the basics of safety to person-centered care, which is really about care for who you are as an individual. And ultimately, it's about humanity.
What would you say was interesting about this year's survey?
What we've seen for the last few years is that cost trends have been increasing. And year over year, what we saw in the survey is that continuing, especially in home care. In the home care setting, what we saw was that costs increased about 7 to 10%. So to take the average, to take the median cost of care to about $70,000 to $75,000 in broad dollars. And why this is significant, what we've learned from paying over 400,000 claims and 30 billion in claims is that people want to have their care in the home. In the facility side, what we saw is that care trends increased about 1 to 5%, taking the average median cost of care from $100,000 to $115,000 in broad strokes. And that increase is significant because since 2001, we've seen about a 20%
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler, and joining me now is the man of the hour, Russell Ford. He is the chair and CEO of StandardAero. Big IPO down here on the floor of the stock exchange today. In fact, the third largest IPO that we have seen this year. Russell, congratulations.
Thank you very much. Our pleasure to be here.
Yeah, we're so happy to have you and your company raising $1.4 billion in this deal. How do you intend to use that money?
The proceeds will be used to provide additional flexibility for the company going forward and support our continued growth efforts.
And the company valued at about $8 billion. Talk to me more about who some of your largest clients are.
We have a variety of clients across the commercial aerospace industry, the military industry, as well as the private business aviation sectors. We work with all 5 of the major engine OEMs, as well as with major trunk airlines and the U.S. government and other foreign military governments.
You've been with StandardAero for years now. What does this IPO mean to you, and why was now the right time to take the company public?
Well, the market value of the commercial and the aerospace aftermarket now is expected to be more than $250 billion this year. The demand for flight continues to grow, and we're there to provide the needed maintenance and service to keep the airplanes dispatched.
Russell, we so appreciate you taking the time. Congratulations. We're going to await the open of your particular stock, but we appreciate the time. All right, well, let's take a look down here on the floor of the stock exchange to see the crowd that's gathering. Of course, all of this coming as we embark on trade in the fourth quarter. And we do see markets a little bit mixed at the open, but we know that as we get fourth quarter trade underway, it's important to realize that we're right near record highs despite some of the volatility. And of course, that all coming as StandardAero is set to debut today.
We're staying here or going with them?
Now to talk more about what this milestone means for StandardAero and how it positions the company within a competitive landscape of the aerospace industry, I am joined now with Kim Ernzen. She is the Chief Operating Officer of StandardAero. Kim, it's such an exciting day. You know, this is the third largest IPO so far this year, the second largest for the New York Stock Exchange, valued at $8 billion. Talk to me about how you feel in this moment, especially recently joining the company just in June.
Sure. It's such a great opportunity to be a part of this company. I did join in June, and you know, StandardAero is such a long history. We've been in business over 100 years, and this is just the next step in our storied history of being able to now access capital markets and really bring the services and capabilities we bring to the aviation industry to light in a whole new way. So we're very excited to be a part of the New York Stock Exchange and joining iconic companies that are on this listing.
As the Chief Operating Officer, accessing the public markets right now, I want to know what your message to investors would be and what your strategic plan is moving forward.
Yeah, we are the engine experts when it comes to aircraft maintenance. We provide the most complex system, and we have such an incredible relationship with the original equipment manufacturers. We are one of the few partners they trust. Think of companies like GE Aerospace, Pratt & Whitney, Honeywell. And so we think that being able to access these capital markets allows us to continue to invest, to be their strategic partners so that we can provide the services of really maintaining and overhauling those critical systems on the aircraft.
Can we talk about third-party MROs quickly and let our viewers know exactly what this is and how it fits into the broader aerospace landscape?
Yeah, we are actually the ecosystem in the middle because we connect the OEMs with the airlines and fleets, with the business aviation markets, with military aircraft. So we can help provide that maintenance and really make sure that they have a trusted partner to be able to perform that critical maintenance performance work on their aircraft while not having to spend all their time and capital, investing in it. So.
Amazing. A lot of key takeaways. Thank you so much, Kim, for joining me. Congratulations again. I'll let you join your team.
Thank you.
All right, we have a lot more to get to, but first we're going to take a few live looks of the floor and we'll be right back. Well, actually, we are seeing right now a few live looks of the floor as the executive team is speaking with Pete Giacchi, who is the head of Citadel Securities Floor Trading. He is the DMM, the designated market maker, again, for StandardAero. And the DMM is a specialized trader here at the New York Stock Exchange, which is unlike any other exchange, a specialized trader to stand with the stock for the days, weeks, months, years ahead. Some of our companies have been listed at the NYSE upwards of 200 years. Con Edison, I believe, is the longest listed company, over 230 years they have been listed with us. And we'll talk about that a little bit more later, but I am going to toss it back over to Kristen, who is with the CFO.
And joining me now to round out our suite of executive interviews is Dan Satterfield. He's the Chief Financial Officer for StandardAero. Dan, it's great to have you on the show, and congratulations on this deal, $1.4 billion raised. How are you going to use that money to grow?
Well, that's great. We're very excited about the IPO, of course. The $1.4 billion, of course, we're going to use it to deleverage. That deleveraging is actually going to give us a great opportunity to reinvest into organic capabilities, value accretive M&A, and of course the opportunity to join new engine platforms.
What are the growth opportunities ahead for the business?
Listen, we're in the best market in aerospace. We are a pure play engine aerospace aftermarket provider. And the great growth opportunities that we have, of course, relate to the investments we've made on the LEAP program and on CFM 56. Very excited about that.
Dan, congratulations again on this deal. We'll be watching as the stock gets ready to open here at the New York Stock Exchange. That's Dan Satterfield. He's the CFO of StandardAero as it prepares to IPO. Well, we're not done yet. Stay with us on NYSE TV Live because we'll have more coverage after this short break.
Enable provides real-time insights into rebate performance, which helps business grow. We're going to find out exactly how from the CEO on this episode of Taking Stock.
So Enable is a software development company, and we provide software that manages B2B rebates for manufacturers, distributors, and retailers.
Now, how does the shift in rebates from business costs to growth drivers impact supply chain partners?
So rebates used to just be seen as a cost, an entitlement almost, that distributors would earn at the end of the year, and it was almost just taken for granted. But they've now become much more of a business driver because they're much more targeted and dynamic, and they're paid when certain outcomes are achieved. So that's been a huge shift.
Tell me about the specific challenges that Enable's platform help address.
Rebates are very complex because there are many different types of products and different categories and different units of measure. So trying to keep track of all of that across the supply chain is very, very hard. And we have a modern cloud platform that allows both sides of the trading relationship to see the rebates and talk the same language.
So you basically enhance transparency, essentially.
Yeah, we're building a lot of transparency and trust in the supply chain.
Now, with Series D oversubscription and extension, what sort of growth do you foresee for Enable?
Sure, so we're growing geographically. We started originally in the UK and we've grown massively in the US, Canada, Australia, but we're going into Europe and many more geographies. So that's one part of it. Then the other part is really adding product capabilities so we can drive even more impact for our customers.
How does adapting a single source of truth, how has that improved collaboration when it comes to your partnerships?
Previously, if you imagine, a manufacturer would have its view of the rebates internally and the distributor would have its view, and they were actually different and not joined up. So this single view of the truth means that both parties can get on the same page and drive business outcomes by talking the same language.
Tell me how Enable plays a pivotal role in helping businesses grow. Welcome back to NYSE TV Live. I'm Trinity Chavez, and now we're going to dive into Citadel Securities' role as the designated market maker, or DMM, for StandardAero on the NYSE. Now, they play a key part in ensuring liquidity and efficient price discovery and overall market stability for StandardAero shares. So to talk more about it, I am going to walk over to Pete Giacchi. He is the head of floor trading for Citadel Securities. Good morning, Pete.
Good morning, Trinity.
I mean, this is very exciting. StandardAero here celebrating celebrating their IPO. Talk to me more about your role and how you ensure a smooth liquidity and price discovery process for StandardAero.
Yeah, so first, obviously, Citadel Securities is extremely proud to be working with StandardAero on this historic listing today. The fact that they were able to come to the market and raise almost $1.5 billion shows that there's green shoots in the IPO market. The DMM model is actually very different than most market models in the U.S. The DMM model has a physical trader at the point of sale who's responsible for the liquidity needs of each corporate they have. They're also responsible for updating the corporate about what flows are in their stock, how their stock is trading. So we like to say that the DMMs are not only here to provide liquidity, but they're also an extension of the investor relations team to help folks understand how the stocks are trading. Specifically to the IPO, our job as DMM is to triangulate the orders at the point of sale here. So very simply, everything that StandardAero went through last night with their pricing is now going to happen real time today. Investors are going to have the opportunity to seek liquidity and to trade the stock. What we're going to do is work with the underwriters and the stabilizers to make sure that all the information is communicated about where the stock is going to open. This is going to play out over a few hours. The DMM's responsibility is to help triangulate those orders, and then once the stock opens, have a continuous two-sided market in the shares.
You know, you talked a lot about the IPO process, obviously, when it comes to price discovery and establishing, the IPO today as it enters the public market sector. But, I want to talk more about how you sustain the relationship after they join the NYSE listed community from your vantage point.
Yeah, so again, I think that really narrows down to the unique model that the New York Stock Exchange offers with the DMM. And the way to think about it is the DMM is the eyes and ears for corporate at the point of sale. Corporates understand their business. They understand how their market works. They understand how their business is working. What they need help with sometimes is understand how their stock is trading, why it's trading a certain way. So the DMMs have the ability from the information they see at the point of sale to help corporates understand what's going on. And again, to act as a conduit to that investor team and that C-suite to help them know every day how their stock is trading and why it's potentially trading the way it is. An extremely unique model to the NYSE and a real differentiator for corporates.
And quickly, after all of this is said and done, and they actually have a direct line to you here. Is that correct?
Yeah, so the way the model is and some of the stocks I've traded for the better part of 20 years. So I think it's thinking about what the relationship not only is on day one in helping a corporate get out, but what that longer term relationship is. And at Citadel Securities, we look at our companies as not only day one, but what it is in day 20, day 40, day 200. And the life cycle of that relationship and that service piece grows over time.
Amazing. A lot of important information right there. Your role as the DMM. Thank you so much, Pete, for joining us on NYSE TV Live.
Thanks, Trinity. Thank you for having me.
It's great having you. Now I'm going to walk over to Kristen. Kristen, what an exciting day. This has been...
That's exactly right, Trinity. And we see the stock market, actually the Dow turned positive, up fractionally just by about 20 points or so, awaiting what's going to be a very big IPO. And as investor sentiment has been pretty strong with stocks near record highs, despite some recent volatility.
And this is really sending the message that this is a strong company to investors. The third largest IPO of the year, second largest for the New York Stock Exchange, $1.44 billion raise. The sentiment out there is really encouraging.
That's exactly right. So for all of our viewers watching, don't forget, download our app, NYSE TV. You can follow us and see our live coverage and our tape coverage on the app, as well as our website, tv.nysc.com. And we hope you're watching on Cheddar. You can find us on the Cheddar channel as well.
The Cheddar channel. Try saying that 10 times.
Cheddar channel. We got it down. Look, there's a lot happening here at the Stock Exchange, of course, between offerings, stock market twists and turns, and, of course, the House Speaker here yesterday. That's going to do it for today's coverage of NYSE TV Live. I'm Kristen Scholler.
And I'm Trinity Chavez. Have a great day.
I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.